time for another stock review, this time FIZZ, National Beverage, and we're getting fizzy. Today with the fizzy stuff, we're going to pop the champagne, we're going to get excited as we look to make some money on the fizzy stuff. Can you make money from this one? Can we stack up the money? Well, we're going to go through and we're going to study the numbers and come to a conclusion whether you can or cannot make money from this stock. In this review, we're going to share you lots of information. We're going to share with you the intrinsic valuation, the balance sheet. We're going to use the latest software, pro plan software that I pay for, so you don't have to, so you can see a full breakdown of the stock. We're going to look at the analysis. We're going to compare it to Coca-Cola and the S&P 500. Latest earnings. Looking at the website. Looking at the products, looking how it treats its investors and what we can do about that and have the company live on the show. We're going to show you the overall position. We're going to show you the balance sheet, who's buying on the inside, the intrinsic valuation. We're going to scroll all the way down here and show you their margins, their profits, how the company is growing. All of this stuff we're going to cover in this presentation. So sit back and relax. We're about to do it for you right now. This is National Beverage. I hope by now you've tapped the like button. You want to help us grow and support the channel, and consider subscribing as well. Remember, I do not own this stock. No one sponsors, pays me to do it. I only own the S&P 500, and I do interview CEOs on the show. You can get one. You can get this CEO on the show. I'll talk to you about that in a minute. But everything you hear here is real, genuine. I'm 100% invested in the S&P. This is my real money. I've got $317,000 invested, 100% there in the S&P. As you can see, this is my real position. That's my real money, and I don't get paid by anyone to promote, sponsor, or anything. Only sponsors I have are my viewers, my members who support the channel, but there's no one paying me to say or do anything. All right, let's get straight into this. Can we make money from FIZZ? And should you invest in Coca-Cola or perhaps PepsiCo instead? And I'm really struggling now. I'm looking down here to see. It's so ridiculous. There you go. I was trying to find my little button that does that, and I just couldn't see it for some reason. I just wanted to pop the FIZZ once again. All right, okay. Let's get straight into FIZZ. So we'll start from the beginning, nice and simple, and then we'll go down in more detail. If we scroll back and look at the overall position there, you can see how the stock has been growing since our maximum position here, which is going back into 2007. That's what I'm showing on the screen at the moment. But you can see it's got some volatility. It's not exactly the S&P, but it does have some growth. Of course it does. 466% over the maximum time from there. Not too bad at all. But if we go and look at it over the year, it's down 14% the year to date. It's down 5.3. So where are we going with this stock? And a little bit of spoiler alert, it doesn't provide you the dividend. So don't compare it to the S&P. Don't compare it to Coca-Cola or Pepsi. It doesn't provide one. It did. It's taken it away. National Beverage engages in the development, manufacture, market, and sale of sparkling waters, juices, energy drinks, and carbonated soft drinks. Its brands include LaCroix Cúrate, LaCroix NiCola, Clear, Fruit, Rip It, Everfresh Premier Varietals. Is that Varietals? Okay. Mr. Pure, Shasta, and Shasta. Is that real? Okay. Means something different in English. Shasta and Faygo. The company was founded by Nick Caporella in 1985 and is headquartered in Fort Lauderdale, Florida. All right. FIZZ is the name of this company. Nick, that's the ticker that is, Nick Caporella. Now, if you'd like Nick on the show, we'd love to hear from him. We've done interviews with many CEOs. Email investor relations, build a relationship with them, say, hey, you love the company and would love to learn more about it. Martyn Lucas has got a trending video on YouTube, because it will. I've got 75,000 subscribers, or just about 74.9, and they might like to come on the show. Talk to them. When they're interested, then you can put them in contact with me, and then we'll get them on the show. All right, it's been around since 1985. Volume, very, very low volume, incredibly low volume, 9,000 today. So far, it's 10:22 in the morning. The average volume is 234, so it's hardly any volume at all in this stock, and we all know what that means. Market cap 3.78 billion. That is the size of the company. PE ratio 20 times earnings. Well, while I'm looking at the earnings of that, let's tell you what Coca-Cola is earnings, by the way, which is exploding today, up 1%, by the way. One of my top stocks. The earnings, sorry, the PE ratio for Coca-Cola is, the difference is 27 times earnings. So you're getting a much better value stock here if you like it, if you like Coca-Cola, but of course it's not Coca-Cola, right? Coca-Cola is not the bottles, the factories, or even the drink. It's the brand. And if World War III happened and everything was destroyed, Coca-Cola would come back and be equally as strong because it's the property of the name. That's the value. Now, if we look at Robinhood investors, they've been buying this recently. They've also been selling it, so nothing to say about that. What about hedge funds? Hedge funds have been equal, and now they've started to sell a little bit, very small amounts. That's uninformative selling, makes no difference. Insiders, they've been selling a little bit, but again, nothing at all. 20,000, this is insignificant, uninformative selling. I don't even need to go and look. From experience, I'm sure that's what that is, so there's no issue there. What about the earnings? Well, as you can see, they are making money, but it's been coming down, and we popped in Q1 of 25, but since then we've been coming down and they've been missing on earnings. But we've seen Coca-Cola do a similar thing with issues last year, and things have started to improve this year greatly for Coca-Cola. But with this company, you can see they're coming down. They're missing their earnings, getting worse. The next earnings is in June. If you want me to cover the earnings, let me know and I'll cover the earnings for you. If you're a member of my channel and you do a $5 super chat or super thanks as a comment to this video afterwards, I can cover the earnings for you if you'd like me to do so. Anyway, let's look at that. Now, who else is buying the stock? So it gives us an idea of how it trends. Disney, Starbucks, FIZZ, Netflix, Coca-Cola, there you go, Uber, Alibaba. Will we see Pepsi in there? Well, let's have a look. Is Pepsi in there? Bank of America, Delta Airlines, J&J, but no, didn't see any top stocks there from Robinhood and in Pepsi. That's interesting. Anyway, there we go. Maybe because it's more to do with the snacks, maybe, than the drinks. People prefer Coca-Cola. Anyway, National Beverage. Let me go now into some further details. Let's have a look at it. So over here, we've got some not so good news, really. If you tap the like button and click subscribe, we'll continue our video. Have you done that yet? If you do it, I promise you I'll share with you my little Coca-Cola bottle again. You ready? Shall we do it? 3, 2, 1. Thumb. There we go. Fizz it out. Lovely stuff. And thank you so much. In fact, I tell you what, because you all tap the like button, we'll do even better than that. We'll show you the little fellas. There you go. There's the little fellas for you. We always love the little fellas. Tap subscribe, ring the bell, and there you go. Tap the like button, and we'll carry on with our review. If you tapped it, you tapped it. Let's carry on. Good stuff. All right. Okay. Let's look at the last earnings just a few days ago. National Beverage GAAP EPS of 0.42 misses by 0.02. Revenue of 267 million misses by 11 million. Not good at all. National Beverage GAAP EPS of 0.42 misses by 0.02. Revenue 267 down 1.1% year on year, misses by 11 million. Operating profit increase, however, 5%, 51 million. Okay, cash was 149 million. Let me show you the factor grade so you can get an idea. Wall Street, strong sell. They're not liking it. It's not holding up to anything like Coca-Cola, is it? Quant, hold. Valuation, D+, hasn't improved. Growth, C+, it's improved slightly. Profitability, however, A-. It makes money, just doesn't have the strength to compete at the moment anyway with the big boys. Momentum, C-, slightly worse. Revisions, D, that's dropped from A. Not good there at all. Short interest, 2.63. Nothing significant. Don't expect a short squeeze, but we've got a little bit of negative pressure, but nothing too bad. Now, the forward PE, this is important. If we look at the PE where it is today, the PE ratio today is 20.26. The forward PE is 20.17, you can see here. So we like to see the forward PE doing better. So growth is being priced in and all the rest of it hasn't. It's the same as it was before. But PE ratio of 20 is a lot cheaper than Coca-Cola, but people overbuy it for the brand. It's obvious, right? Okay, let me now show you some comparisons and some thoughts on how it competes with its competition. Tap the like button if you wouldn't mind, and please consider subscribing. Once again, if you do that, I'll show you the little fellas. There you go. There's the little fellas. They really appreciate it. Thank you very much indeed for tapping the like button. It shares it out to more people, and we really appreciate that here on the show. Right, so let's have a look. National Corporation. National Beverage. We don't need to go through that again. I've just read what the company does, but if you want to pause the screen and read some further information, you can pause it and you can read all that if you like to. Okay, I'm trying to give you the best value of time. Competitors and their unique value. So how can we compare this to the S&P 500? Sorry, Coca-Cola. I was thinking something different then. How can we compare it to Coca-Cola and Pepsi? And let's see how it stacks up. National Beverage Corporation operates in a highly competitive beverage industry, facing competition from major players such as PepsiCo and the Coca-Cola Company and Monster Beverage. These companies offer a wide range of similar products, including soft drinks, juices, and energy drinks, targeting the same consumer base. National Beverage differentiates itself through its focus on health-conscious beverages, offering innovative flavors and packaging in its LaCroix sparkling water line. The company's ability to quickly adapt to consumer trends and its vertically integrated production model provide an advantage in maintaining quality and responding to market changes. Additionally, National Beverage's strategic use of social media and regional marketing initiatives enhances its brand visibility and consumer agreement. That's great, but someone having watched and covered all the Coca-Cola earnings for the last 4 years, I'm also aware that Coca-Cola is massively investing in the digital space and the AI space, and they're bringing a line of health drinks in. So, National Beverage have got it all to fight against. Right? Difficult. Let's look at the metrics and see what they actually mean. So the valuation is stretched with price to sales ratio of 3.18, significantly higher than the sector median of 1.18, indicating the stock is expensive compared to peers. So even though it appears to be cheaper, it's actually more expensive. Going forward, price to book ratio 9.33 further highlights the premium pricing. Growth for FIZZ shows mixed growth signals. While EPS gap year-on-year growth is an impressive 24%, the company's revenue growth year-on-year is only 0.34%, far below the sector median of 2.2%, indicating a slow revenue expansion. Profitability. FIZZ exhibits robust profitability with a net income margin of 16%, significantly above the sector's 4%, and a return on total assets of 31%, far exceeding the sector median of 4%, showcasing efficient profit generation. Momentum. The stock momentum is weak with a one-year price performance decline of 15% compared to a sector median decline of 7%, indicating bearish sentiment and underperformance relative to peers. Revisions. The earnings revisions are negative with one downward revision for both EPS and revenue estimates in the last 3 months, signaling a cautious outlook from analysts. In summary, FIZZ demonstrates strong profitability, but faces challenges with its high valuation and mixed growth and momentum metrics. Recent negative earnings revisions contribute to a hold rating, suggesting the stock may align with sector performance. So there you go. There is some analysis on it. We're also going to now show you how it compares to the S&P and Coca-Cola. Going back as far as 2016, National Beverage, you'd have doubled your money from 10 to 22. This is reinvesting dividends, and we're going to talk about dividends briefly. National Beverage used to provide a dividend, $2.55, dropped down to $1.50, $2.90, $600, then it halved, all over the place, and now it doesn't again. So it's not a dividend king like Coca-Cola, nothing like, all right? But there you go. This is investing all the dividends we would have made. You would have made 22 grand, so you got you've doubled your money. Coca-Cola is the same. 22.9, 22 flat. Virtually the same. Not that much difference. So over that period of time, not quite as good, but you would have done, sorry, I beg your pardon. You would have done slightly better than Coca-Cola over that time. 22,985, Coca-Cola 22, and that is reinvesting the dividends. What about the S&P 500 though? My favorite stock, 3x'd. 33,000, nearly 34,000. So you'd have been better just owning the S&P 500. The S&P 500 is up here. National Beverage is here, and Coca-Cola is here. Now, what you can see is Coca-Cola is very, very steady. That's in green. Very, very steady. Well, National Beverage, it allowed you the opportunity to buy here, sell here, buy back. It's a very much more tradable stock, even though it's very low volume. Coca-Cola, you just own it unless you're using it as a piggy bank to buy tech. Coca-Cola, Pepsi, J&J, dividend kings, best stocks in the world. They are used as piggy banks for the tech stock like Nvidia and all that kind of stuff. But if you trade successfully, that's the blue line here with the beverage company, you've ended up around about the same. Look, slightly better than Coca-Cola, but you've been able to buy lower, sell higher. You can really trade it. But for that, you need Sensei on Sunday. I'll give you the link at the end. Join Sensei on Sunday, and you might want to ask for a chart. Say Martyn sent you, and he'll do your chart. If you're one of my members, you'll get a chart done, and Sensei will show you all the buy zones, sell zones, and how to find the levels to trade this. And then you can actually outperform Coca-Cola. But you could just bought the S&P and done nothing and beaten it anyway. Just saying. So there's just something to consider. Okay, so let me show you just a little bit of the website, just so you get a flavor. You might have seen these drinks, LaCroix. I'm sure you have. They're trying to be more healthy, if you like. But this is the company, and this is what it looks like. This is what they say to the investors. They say to you, the investor, National Beverage innovatively refreshes America with its distinctive sparkling waters, juices, energy drinks, and to the lesser extent, carbonated soft drinks. We believe our creative product designs innovative packaging, innovative flavors, along with our corporate culture and philosophy, make National Beverage unique as a standalone entity in the beverage industry. And they're talking about sustainability here. They're really trying to be different when it comes to Coca-Cola, or at least that's what they're aiming for. Okay, now let me give you some visual representation of this now, and you can draw your own conclusions. So tap the like button and consider subscribing. That would be absolutely wonderful as we go to the last part of our review. Nice and sparkly fizz we're doing here right now. Fizz, F-I-Z-Z. Let's finish off with this last part of the review. So we want to look at the intrinsic valuation. The intrinsic valuation is suggesting we're overvalued by 7%. It's too expensive, essentially. That's what we're saying. But that's not that much. It's quite new in the space, and if you believe it's a growth stock, which kind of is now, it's not got a dividend, then I'm prepared to spend overvalued by 25%. But that's for something with massive amounts of growth. Has this got that sort of growth? Maybe it has. Can it enter? Can it compete with Pepsi and Coca-Cola? Only time will tell. But overvalued by 7%, so not too bad really. If you look forward, worst case scenario, we're not in a worst case scenario. Rates are coming down, things are improving. We'll look at the balance sheet in a moment. Best case scenario, 19% undervaluation. So maybe this is all right. Okay, scroll down, and what do we have here? We have the financials. Revenue is flat. It's not really expected to increase much in the future. For as far as we have. Operating income at 1%, same thing. But Coca-Cola can be the same. They're not on S-curves either. They're not Tesla. They're not AI. They're not Nvidia. Steady business as usual. You can get, you can do well over time with these. You've seen how it's performed over time against the S&P and Coca-Cola, right? Net income is flat. Free cash flow up 5%. Operating cash flow up 6%. EPS is flat. What about this? The balance sheet, 594 million in assets, of which 149 is cash. That's a good balance. I like it like that. Don't like just a big cash pile. There's just no point. You should have assets working for you. So I like that. What about the liabilities? So they've got 149 in cash. In debt, long-term debt, they've got no long-term debt. They've got no short-term debt. Well-funded business, got cash. I like it. So the profits aren't great, but the balance sheet is going to be great. You can buy it and feel confident it's not going to go anywhere, right? Now then, gross margin 37%. Now the software you're looking at right now, I'll put in the chat for you, Alpha Spread and Seeking Alpha. I'll also, if you're watching this later, put below in the description and pin to the comments at the top. You might want to look at this because you can compare this software. You can hover over and get the comparisons and you can get the explanations, but you can also compare to using this software, Alpha Spread. I'll give you the link. You can get free trials, free discount, 20% discounts, whatever you want. And you don't get that without my referral. You can see how it compares to Coca-Cola visually on the screen and Pepsi, and you can make an informed decision. So gross margins sound great. I haven't got time to show it you right now. You can do that yourself. But net margins is 15%. In fact, I do want to do that. I absolutely do want to do that. So I'm going to duplicate this, and I'm going to go to net margin of Coca-Cola. So 15%. You can see that operating margin, net margin, I beg your pardon, is 15%, yeah. If I go to Coca-Cola, type it in, this is my software you can use, Coca-Cola, and scroll down, and when net margin was 15%, net margin for Coca-Cola is 22%. There it is. There is your net margin from Coca-Cola. There is your dominance, right there. I just wanted to show you that, all right? And that's what you can do with this software. Really good, right? FCF margin 14.8, ROCE 46%. Again, if you hover over it, it gives you the definition. You can find out what all these metrics mean. 48.6% ROIC, ROA 29%. 42% on ROE. Okay, scrolling on down, profitability, 71%. Shall we go and look at Coca-Cola? All right then. 71% on Coca-Cola. We are looking at, where was I looking? Profitability, what was I looking at? Profitability score, 70%. On Coca-Cola. On FIZZ, 71%. On Coca-Cola, the balance sheet is 48%. A lot of investment recently. They're putting a lot of money. They've been really investing big recently. You can see here, average DE. All right, they've been really investing a lot recently. That's why their number is low there. All right, 48%. Look at FIZZ. 88%. Now, don't think that Coca-Cola are going to go bust. Of course they're not. They've been investing to try to crush these new competitors coming into the space, and they'll probably succeed as well. But anyway, there you go. Let's carry on with FIZZ. 5% on the upside average. Sorry, the lowest. 6% on the average, and 9%. That backs up what I just showed you a few moments ago when we did a back test like this. Exactly what I just said. You're better off just simply investing in the S&P 500. Okay, let me give you my final reviews, final thoughts. If you tap the like button, have you considered subscribing? And just one final time, just because you did, here are the little fellas, and they appreciate you subscribing and doing all the good stuff. So thank you very much indeed. Let me give you my final thoughts on this stock. If you are a trader and you follow Sensei on Sunday, I'll give you the link in a moment, you might like this, because if you find the buy zone, sell zone, support levels, and Sensei will show you on Sunday at 3 p.m, I'll give you a link in a minute, you might like to trade this. And if you do, you can beat Coca-Cola. However, it's not a dividend king. It's not the same. Doesn't give you passive income. It doesn't, not that that's important. This is focusing on growth, focusing on disrupting, but Coca-Cola is trying to compete, and it probably will. So if you like to trade, you could do well on this. However, even if you're a good trader and you've bought at the bottom and sold at the top, you've still underperformed the S&P 500. So if you like this as part of your portfolio, you like a disruptor, you like something that could possibly compete with Coca-Cola in a different way, and Pepsi. It's got some exciting products that could do that, but and the balance sheet is good. You can buy it with confidence. But if we, like I just said before, if you look at the highest forecast, 9%, you're better off just buying the S&P 500. But you might like to add this to your portfolio if you like the idea of a disruptor in the space. For me, it wouldn't be a buy. I would just own the S&P. Sorry to be boring, but making money consistently is very often seen to be boring. I don't think it's boring. I like boring. Boring is winning. But there you go. So National Beverage. Click above my head for all the links that have been appearing all the way through this video. You keep seeing little things pop up here, and you can go and check those out. If you missed them, you can look below in the description, click the More button, and you'll find all the links that have been appearing up here throughout the video. Down below in the description and pinned to the top of the comments when this video comes out, you will see the links for Seeking Alpha, Alpha Spread, and the playlist for National Beverage, and everything else I think you'll find useful. Over here, I'll create a playlist for National Beverage, and down here I shall put my full Alpha Spread playlist. I've like 300 stocks I've reviewed, all in order, so you can see what's new, what's trending, how the views are going, so you can see the comments, what people are buying, gives you an idea of how things are trending and all the rest of it, and you can go and check out the full list. So there you go. That's my next request, FIZZ National Beverage. Leave me your thoughts below in the comments. Until next time, as always, take care of yourselves and each other.